Price charts are at the heart of trading. For traders like us, chart reading is a must. In our upcoming video, we're diving into the three main types of technical analysis charts: lines, bars, and candlesticks. Before delving into the exploration of three chart types, it's crucial to understand the reasons motivating us to learn. As humans, we respond to and process visual data better than anything else. With the assistance of a chart, one can easily discern and analyze the movements, patterns, and tendencies exhibited by a currency pair. One thing to always remember is, the charts don't lie. The charts represent the money on the table at the end of the day. That is why they are so important. Charts are a widely used tool in trading and investing to quickly see the stock's past performance, highs, lows, trends, moving averages, trading volume, and much more. Charts are truly the footprint of money. What some talking head on a financial news channel might say becomes irrelevant when you can look at a chart and see what the money is saying. It is also very true that history repeats itself. That is, if a stock has historically failed to break through a resistance level on the way up, then there is a reasonable probability that it will repeat the problem again. And looking at the flip side of this scenario, if the stock has historically held at a support level during a decline and refused to fall further, then there is the same reasonable probability that it will repeat this in the future. Price charts can be viewed at various time frames, from minutes to months or even years. This flexibility allows traders to analyze short-term and long-term trends and make decisions based on their preferred time horizon. Let's take a look at the three most popular types of price charts: line chart, bar chart, candlestick chart. Now, we'll explain each of the Forex charts and let you know what you should know about each of them. First, line chart. A simple line chart draws a line from one closing price to the next closing price. It plots a single line that connects all the closing prices of a stock for a certain time interval. It's simple to follow, but the line chart may not tell traders much about each day's activity. It will, however, help traders see trends easily and visually compare the closing price from one period to the next. A line chart is a simple depiction of price action. You can quickly identify if something is moving up, down, or sideways. Line charts are great for getting an overview, but if you want to get more granular, you may want to consider bar and candlestick charts. Second, bar chart. A bar chart is a little more complex. It shows the opening and closing prices, as well as the highs and lows. So, on a daily chart, each vertical bar represents the price action for one day. On a weekly chart, each bar represents a week, and on a monthly chart, each bar represents a month. The highest point of each bar represents the highest price that was traded during the period. The lowest point of the bar shows the lowest price that was traded. The short horizontal line to the left represents the opening price of the specific period. The short horizontal line to the right marks the closing price. A bar chart may look busier than a line chart, but you can get a better idea of where the high and low prices are relative to the open or close. They can be helpful for analyzing longer-term price movements. Some investors prefer to use bar charts for all their price analyses. Others prefer to get an even more detailed view of shorter-term price action with candlesticks. Third, candlestick chart. Candlestick charts show the open, high, low, and close just like bar charts. The difference is in the area between the open and close, which is referred to as the real body or simply body. The body is usually white or green if the close is higher than the open, and black or red if the close is lower than the open. The lines above and below the body of the candle are known as the shadow or wick. Candlestick charts can indicate how bullish or bearish investors are. Investors often use candlestick charts to identify trend reversals so they can decide when to buy or sell. Now that you know the technical analysis chart types, think of ways you can use all three for your chart analysis. Feel free to comment and share how you employ these three charts in your analysis. Thanks for watching. Happy trading and have a win!